All right. So to continue our capital gain discussion, I'm now looking at slide 13 in the capital gain package. And that slide talks about pooling of identical assets. I'm assuming you know how to do a weighted average calculation. We do that with various things. So the identical assets, we're talking mainly about stocks. I believe I assigned a problem with this, so you might want to check and see if you have a problem on this and do it with this slide. It's just a floating weighted average. So it's just a bunch of math. All right, there's nothing excited about this. You can do specific identification under certain very restricted circumstances, but for the most part, it's a weighted average. Now, there's special rules about options, not the, like there's rules about employee stock options and other kinds of options. Remember that the ACB of a employee stock option will include employment income from the stock option. Don't leave that out. Make sure that you keep track of that. But what I'm thinking about in particular is puts and calls, which are laid out in the slides, that you have to pay attention. They will be treated as capital. If one of the puts or calls expires, you've got a capital gain, capital loss, depending on which side of the transaction you're on. So I've given you slides on what the tax treatment of that is. There's nothing, terribly exciting about those. We do want to talk a little bit about superficial losses. There's all kinds of anti-avoidance provisions throughout the tax law. You do have the general anti-avoidance rule, of course, that we've talked about before, but that's kind of broad and not as easy to apply. There are specific rules throughout the law where the government has said, we want to be clear that you're not allowed to do this, all right? So superficial loss rules are there to prevent essentially a artificial, but the government certainly considers an artificial loss. And the way they arise is that, like, maybe you own some stock that you have a cost of, say, $25 per share, and the current fair market value is $18 per share. The market is low right now. And you want to own the stock. You think it's good stock, it pays good dividends perhaps, something of that nature. But right now you've got some capital gains that you're going to pay tax on. So they're taxable, and you would like to have some losses to offset those gains. So what you decide to do is you're going to sell that stock. So this is, let's say, stock of AB company. Sell AB company stock, and you'll have a loss of $7 per share. 25 minus 18, I hope that's 7, all right? And that will offset the capital gains that you're reporting that are taxable. And then after you've sold that stock, then you buy the stock back at whatever the price is, but assuming the price is probably around the $18 a share that you sold it for. So basically, you owned it, you sold it, you own it again. And the CRA and the government consider that artificial, all right? And the rules are there's a 30-day rule and when you can do this and so forth and so on. So this is an anti-avoidance provision saying, okay, if you do that, all right, the loss will be denied and will be added to the basis. So what happens is it basically wipes out the transaction, that they don't allow that $7 loss, but they take the 18 that you paid to buy the stock plus the 7, gives you a basis of 25, which is where you started. All right. So they basically just say it didn't happen to all intents and purposes. And that's those rules apply in other areas. There's areas with terminal losses and things of that nature under certain circumstances that the same rule will happen. that the loss will be denied back to the basis. So it essentially ignores the fact the loss happened. All right. Now, briefly, convertible properties. There are times when items can be like a bond, a convertible bond can be converted to stock, preferred stock, common stock, class A, class B, whatever it might be. That's an attractive feature. Investors will pay for that. It lowers their risk because it gives them more upside risk and so forth and so on. But when you do the conversion, essentially you can do the conversion with tax deferral. You can convert with deferral. And again, this is an ability to pay. It's an element of fairness again. There's so much of this ability to pay in there. Watch for it. Think about it. All I'm doing is I have a bond. I'm going to give that up in exchange for stock of the same company. That's what a convertible property does. You have the same company involved, the same taxpayers, et cetera, et cetera. So where's the money to pay the tax? All right. You don't have the money to pay the tax. That's where it is. All right. So when you have this type of transaction, what happens is they simply say, all right, there is no tax, we'll defer the tax, and the ACB of the stock, the ACB, the cost base, I'll make that maybe more clear. The ACB of the stock, the cost base of the stock will equal the ACB of the bond. So everything carries over. All right. Now you can't use any boot. Now what is boot? I note in the slide, you can't use boot. All right. Boot is anything except the exchangeable property. So if I'm exchanging a bond for stock, that's it. I can't have stock plus, maybe 20 bucks or something of that nature. So boot is something extra, something in addition to the basic exchange. If you have boot, then it's a fully taxable transaction at fair market value. So you can't do that. You'll see boot again when you look at setting up a corporation, but that's the fundamentals of any convertible property. And it's really the fundamentals of any exchange, really no money, that you're just one type of security for another type of security, that sort of thing, that you haven't really changed anything economically at that point in time. Okay, so that's basically the way that would always work, that if there's no economic substance change, basis will carry, there'll be no income recognition, provided there's no kind of cash or cash equivalent or something extra, that quote boot showing up in the transaction.